Let's turn to the US markets, which are still volatile. They got a beating, remember, on Monday, where there was a $4 trillion wipeout of the markets. Now the Dow Jones Industrial Average falling further on opening today after President Donald Trump imposed another 25% tariff on Canadian steel and aluminium. Yesterday, Wall Street marked its worst day since 2022. The S&P 500 plunging 2.7%, the Dow falling 890%, the sell-off being triggered by escalating fears over President Trump's aggressive tariff policies. Trump saying that the US economy was in a period of transition. Across the world, all markets have been in the red, and that really is the worry going ahead. Ridham Desai, one of the country's leading analysts, managing director at Morgan Stanley India, joins me. Ridham, we've seen a $4 trillion wipeout in the US markets, across the world, markets in the red. Is this the Donald Trump effect, or is there something more?
Hi, thanks, Rajdeep. Good to be on your show. So actually, markets trade earnings. That's what they trade. And earnings in America started peaking in December. So it's just coinciding with a lot of uncertainty that has been produced by US policy. But the fact is that earnings started peaking in December. So things were turning a little less attractive in America. As you know, America has been on a roll, especially since the global financial crisis has been the bellwether market for the world. But it does appear that the markets are now worried that the economy in the US will be slipping into recession. And, part of this is attributed to what President Trump is doing.
That R word, you mentioned recession. Donald Trump, when asked a question, said wasn't ruling it out. How real is that threat of a US recession? And if that happens, could we be then seeing a prolonged downturn and not just a short-term correction?
So it's not our base case that the US will slip into recession, because remember, interest rates are still high in America. So the Fed has a lot of ammunition to react in the case growth slows down perceptibly in America. So there is room for them to reduce interest rates very quickly to counter such a slowdown. But yeah, there is a growing fear in the market, even though it's not our base case that we will get into recession this year.
But so are you more confident that this is basically a short-term correction? Are you more confident that 6 months from now, things will be better, particularly from an Indian perspective? Is India, in a sense, could be a potential beneficiary?
Yeah, so two parts to that question, Rajdeep. I don't know about the US because, frankly, it depends on what eventual policies get rolled out with respect to tariffs, with respect to Dodge, and all the other things that are up for debate and are being done in the US. So that's a little imponderable. India, I think, is a little different. We have, and I dare say this, decoupled from the rest of the world over the past few years. We're not dependent so much on global capital flows as we used to be in the past. And to that extent, this hurts us a lot less. In fact, if you look at India's export performance and just strip out oil and oil products from it, we're actually doing quite okay. So India is gaining share in global exports, both services and goods, especially services. And the domestic economy that did go through a bit of a rough patch the second half of last year, particularly because of slowdown in government spending, is, I think, reversing quite nicely in this quarter. And you can see that in the GST collections. Growth rate in the fourth quarter of 2024, 8.3%. Year to date, it's already at 12%. So there is a recovery underway. It's led largely by a recovery in government spending and what I call as the policy pivot from RBI. So RBI seems now committed to get growth back, and that will help the domestic economy. So I think India is okay. We've had our own correction, actually, which happened before the US stock started falling. And my own view is that a lot of that is already now done.
You seem to suggest the Indian economy has less to worry about, but the fact is foreign investors have been rapidly pulling out of their money out of Indian markets in the last few months. How much of that is driven by global risk aversion versus domestic economic factors? You seem a little bit more hopeful that the domestic economy will recover over the next 3 to 6 months?
No, there are three parts to that, Rajdeep. It's not just one factor. So clearly the slowdown in the domestic economy that happened second half of last year has unnerved foreign investors, and some of this outflow is relating to that. The second reason is that, remember, China put in a lot of stimulus in September last year, and the Chinese economy, and especially the stock market, started doing very well. So they started attracting more inflows. So that could have been another reason. The global situation right now is a little uncertain, so that also matters. But primarily, India has a very strong domestic investor base. And if you come into the stock market every single day, domestic investors are buying stocks. And in practice, there are only two players in the market. There are domestic investors and there are foreign investors. And if one cohort keeps buying stocks every day, the other cohort has to sell, otherwise you don't get a trade. So the only way foreign investors can start participating in the likely growth recovery that I'm talking about is that corporate issuers come to the table and say, okay, here we are, we got some fresh issuances, we'll give you some new shares, and that's how foreign investors can participate. Or domestic investors have to start giving up, which, Rajdeep, I don't think is happening. A lot of people suspected it will happen, but they withstood a very, very bad January and February and are still there in the market.
So at the end, net, don't worry, be cautious, but there is no need to panic. Am I correct?
I think you summarized it well. There's no need to panic. I think India is good. Of course, if there is a recession in the US, it will create pain. And we are part of the world. We are, amongst the top 5 economies in the world. So we can't remain totally unscathed. But I think we have our own factors at play. And a lot of investors abroad will recognize that with the passage of time and return to the Indian markets.
Okay, I'm going to leave it there, Ridham Desai, for in a sense, giving a sense of comfort on what's been a rather turbulent 36 hours. Thank you very much for joining me there. Ridham Desai of Morgan Stanley, appreciate you joining us on the show.